Hi, I'm Victor, and in today's video, I'll be talking about Zoom, ticker ZM. Over the last few years, it's just about impossible not to have heard of Zoom in some way. Either you were invited to a meeting that you had to attend on Zoom, you looked at their stock price as it went up during COVID at such a fast rate. Some way, somehow, you had to have heard of Zoom. It's pretty much made it into our vocabulary. Hey, it's used as a verb, as a noun. It's really replaced the video conferencing service, and really when you book a remote meeting, you say, hey, let's get on Zoom. It's never let's get on Microsoft or Google or Cisco, some of their competitors. It's always a Zoom is the chosen word. So I'd like to go over the fundamentals of the company, some latest news, and I'd like to share with you why I'm an investor in Zoom and why I continue to invest in Zoom. So as we look at the Zoom stock over the last 5 years, you could see when COVID hit, they were just a stock that was, a popular service, but the market didn't quite, catch the excitement for this particular stock. But once COVID hit, and we realized, hey, we're going to be doing a lot of remote activity. Boy, their stock just took off. It went from trading at somewhere around $90 a share, and then it peaked at I think it was well above $559 per share. So it was just an explosive growth. And since then, it's really gone down, especially as it hit the latter part of 2021 and into 2022. I think the market's seeing that, hey, Zoom isn't going to, sustain that just crazy growth that it saw in 2020 and part of 2021. So it's really trying to figure out how much is this company worth, and it's certainly been a wild ride for this company. So I look at a couple of things. First is market cap, $35 billion for what I believe is the number one video service out there. Second is price to earnings ratio. It once was just this crazy high number. Now it's 26.25. So I'm looking at it as, hey, I can own a piece of the best video service company at $26 price to earnings ratio. The other piece to it is, video conferencing, it's here to stay. It's part of, how we operate now, whether you're working, going to school, you're keeping up with friends and so forth. This whole video conferencing it's here to stay. So I believe that this is going to be at worst a stable growing company that is profitable and generates a lot of free cash. Now let's take a look at their most recent earnings call. They talked about the growth they had in the last 12 months. They really are focused on selling into larger companies, the enterprise. What that in essence is you're selling to one company that has many users, and that one customer is going to spend a lot of money on Zoom. I happen to work in the software industry. This is what I do, and I totally understand what they're trying to do. It's a very profitable model and good for them. So a couple of things is, year over year growth was phenomenal, 55%. If you look at quarter Q4 versus Q4 of this most recently closed year, it grew 21%. So even after a very difficult compare, a 2020 year that just had everybody needing video conferencing software, and Zoom's revenue just flew off the charts. Even comparing to 2020, they're growing at 55%, which is phenomenal. Couple other things that I'll note is their free cash flow. It's just awesome. They're doing so much in free cash flow. I'm going to get into that in a little bit and show you the ratio there. So I took the Zoom financials and put their information into my intrinsic valuation model. And here's what I came up with. First I used a discount rate of 5% and I used a revenue growth rate of 10%. Historically, they're just growing like crazy. If I look at the last 5 years, they grew at 300%. Last year, year over year, they grew 55%. So 10% is a good number. The company is guiding to grow at 11% this year. And I happen to think they're sandbagging a bit so that they can surprise to the upside. I happen to think that, but overall, 10% is a good number to go with. Their free cash flow for the most recent year was 1.473 billion. And that number, if we put it through the model, calculates that the company's worth 50.189 billion. Their current market cap is only 35.3 billion. They have 296 million shares outstanding. So therefore, the intrinsic value per share that I estimate is that the share price, value should be $169 per share. They're trading at $118 per share. So I consider them being discounted, or the price of their stock is discounted by 44% currently. All right, so just to summarize my review of the Zoom stock, first, performance-wise, this company has been performing really well. Last year, they grew 54.6% year over year, and that was compared to a year where, revenue was greatly accelerated during the COVID year of 2020. So to have such a difficult compare and be able to grow 55% is just a great testament to their management. Free cash flow. These guys generate free cash flow. I love companies that generate free cash flow. And they generated 1.473 billion, which is only 24 times to get to their market cap. So you think about a growing business that can basically pay back its investors in 24 years, which would be accelerated because they're growing. That is just a great factor. Their cash balance makes their balance sheet incredibly strong. They have $5.4 billion of cash on their balance sheet. That's 15% of their market cap. With that cash, they've decided that they're going to rebuy $1 billion of stock. So they're buying $1 billion back of stock this year. That was in their guidance. They're going to guide for 11.5% year over year growth. Now, I think that's a conservative call on their behalf. I think they're going to do better than that. I think they're going to surprise to the upside. That's me looking at, their historic, performance, where, this company's at. I think they're a little shell shocked that their stock just went up so fast and then it started to go down really fast. So I think they're playing it safe. I don't think video conferencing is going anywhere. We continue to use Zoom daily, multiple times in business, school, all kinds of use cases. Zoom is here to stay. My outlook on the company is they're going to grow faster than what they're guiding. I would say up to 15% is this year, maybe even higher. Second is I believe that Zoom has a pricing power. Like Netflix, who raises their price every so often, and all of a sudden their revenues go up, their stock price goes up. I believe Zoom has the same power. Where are customers going to go? Their employees, their customers, the people they have to communicate with are accustomed to Zoom. So I think there's a lot of stickiness to this product, so they can raise their prices and increase revenue. And last, this company is going to produce free cash flow. Needless to say. Now, I love growing companies that produce free cash flow. And I believe that Zoom is the #1 company in video conferencing. And you can buy a part of this company for, I believe, a discounted price at the current time. I want to thank you for watching my video. I greatly appreciate it. Please like my video and also provide any feedback that you'd like to provide to help me improve my videos. Thank you.